Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and today we're talking lithium. I have Keith Phillips. He's the CEO of Piedmont Lithium. The ASX code is PLL. They're also listed on the NASDAQ. It's an exciting time for Piedmont Lithium. Keith, great to see you. Lots to talk about today. You've got grants from the US government. You're getting into production. Times for lithium. There's those out there that say, lithium's had its day, but quite frankly, I don't think so. Let's start off with just a quick overview, because last time I spoke to Patrick, your COO, it's great to speak to you. Give us a brief overview. Where's Piedmont Lithium at right now?
Well, first, Kerry, thanks for having me again. It's always great to speak with you. Piedmont's in a great place. The business was started in 2016, and here we are finally in 2023 with revenue around the corner. 4 exciting projects in development, listings, as you said, in North America on NASDAQ, where we're domiciled, and also here in Australia. I'm actually in Sydney now. I haven't been here for 3.5 years because of COVID, so very excited to be back in Australia. We're very committed to our Australian listing, and we look forward to building more interest here and putting our name in front of people. And I think it's a perfect time to look at it. I'm massively bullish on the lithium business, and I think we're ideally positioned for the coming bull market.
Before we get into your projects, just quickly, why are you so massively bullish? Because there are those out there that say, look, lithium's everywhere. There's so many companies with lithium projects. We don't have enough, though, do we?
You know, I think in the long run, we'll be fine. We'll have plenty. I say the long run, I literally mean the 2040s. I mean, I think it's by the 2040s, I think lithium will look a lot like copper. It'll probably be as big a business as copper. You'll probably have demand growth of 4% a year or so. You'll have had lots of discoveries. Recycling will be a factor, and I think we'll have a more stable pricing environment. I think it's for the next decade, I think we're going to have lithium euphoria. I really do think virtually every project will be late. Every project will take longer to ramp. Demand will continue at a pace that people haven't seen before. We grew 60% last year in demand. EV penetration's way ahead of people's expectations. We're in 2022, we were at kind of 10% globally. That used to be the 2025 estimate. Now people are talking about 20% penetration in 2025, double what they thought a couple of years ago. So demand's growing really quickly. It's easier to build a car plant and a battery plant and a cathode plant than it is to build a mine. I think supply will take a long time to catch up. So while things might be lumpy, I expect elevated pricing for a long time.
Okay, that's a really good overview. Look, let's talk about Piedmont itself, because our audience out there, they're investors, they're looking at opportunities. You've got a partner in Sayona Mining. The ASX code is SYA, ladies and gentlemen. And you've made significant progress, I should say, to get into producing your first spodumene. Talk to us about that, because that's important.
Yeah, it's really important. And our partner, Sayona Mining, is based here in Australia. They've built a fantastic team in Quebec. We jointly acquired an asset called North American Lithium, NAL, out of receivership. This is an asset that was built 8 or 9 years ago at a cost of $400 million. It operated a couple times. They didn't really put enough capital into the project. They took some shortcuts. Markets weren't like they were today. So we acquired that in August 2021, and we've been working jointly to put it back into production. We're investing $80 million in that process. That money's largely spent. Sayona had a press release this morning, I think, and I haven't really even read it. I've been on the road here today, but they're talking about first production being on track for March this year, which is fantastic. We'll see how the ramp goes, but given that it's a brownfield project with just some important improvements being made, we think we'll be ramped to full production by the end of the year. We're hopeful that the production will actually exceed targets that were established in a pre-feasibility study. And it's very exciting. And I'll tell you, living in North America, and we're in a market where the fastest growing EV market in the world is the United States. And we're woefully short lithium materials in the US and Canada. This will be the first new producing lithium project in 60 years in North America.
Wow.
And there's nobody else within 2 years of us. So all the customers you might think would want the material are looking for it. And we're having good dialogues. We are, and Sayona is, with potential customers. So it's all really exciting, and the timing's perfect.
Are your customers US based or all over the globe? Because I know that you've got that loan that's come in, the grant from the US government for the Tennessee mining operations. Talk to us. Is the NAL project, is that I guess earmarked for US or other customers?
Yeah, so the NAL material is going to be spodumene concentrate for the time being. Tennessee is not going to be a mine; it's going to be a lithium hydroxide plant in 2025 or six. So eventually, some of the Quebec material may find its way to Tennessee. The way the deal works with North American Lithium, we're both a partner. We own 25% of the joint venture, but we're also a customer. We're buying half or more of the material. So with our share of the material, we'll on-sell that to global customers. We announced an agreement a couple of weeks ago to sell some of that material to Tesla. We hope to announce in the coming weeks an agreement to sell the rest of our share of the material to another global major company, car company or battery company. And I know Sayona is advanced in some really good discussions with other potential customers for the joint venture share of material. So blue chip customers, the reality is for the time being, virtually all the conversion activity happens in China. So even if the customer is a U.S. car company or a Korean battery company, my guess is for a couple of years the material will be tolled through China, but we'll be delivering it in Montreal to customers for them to take where they'd like.
Talk to us about because we just mentioned the Tennessee mining operation and the funding for that and where you're at with that.
Yeah, so Tennessee is a 30,000-ton lithium hydroxide plant. So it'll be the biggest lithium hydroxide plant ever built to date in North America. There are others on the drawing board, including our Carolina Lithium project. So Tennessee is just a converter. The CapEx is around $600 million. We did receive a grant from the U.S. government, from the Department of Energy, for $142 million last fall. Yep. That's fantastic. That's essentially a matching grant. So as we spend money on the project, that'll be matched up to $141.7 million. The rest of the CapEx, we've got lots of funding options. We filed a new presentation yesterday, and in that presentation, we talk about some of the funding options, including loans from the Department of Energy, which can be very sizable and can be and at relatively low cost. We're optimistic we'll qualify for a loan. We've applied already. We think we'll get prepayment for the offtake from Tennessee. Long story short, we've got a strong balance sheet. We have $100 million of cash, give or take. We have $250 million plus of equity in Sayona and Atlantic Lithium, our other partner. Oh, yeah. We don't think we necessarily need to ever come back to the equity markets, which is a wonderful thing. The other thing we hope to have is significant cash flow out of Quebec to help fund Tennessee and Carolina. And that really will be a driver of when we commence production or construction in the U.S. We may wait to be generating this cash flow to help minimize dilution for shareholders so we can build out a cash flow.
There's been a lot of, with Piedmont Lithium, there's a lot of partnerships going on because you mentioned Atlantic Lithium. Do you think that's where success comes, from partnering with others, and that potentially that gives you a greater reach?
Yes. I'd say, listen, we have wonderful relationships with Sayona and Atlantic, both doing a great job with their projects where they're both the operators. Yeah. And we helped facilitate funding for both of them. We brought money into Sayona at a time when they needed it to acquire NAL in partnership with us. We're funding Atlantic Lithium through DFS and most of the CapEx. So that partnerships have worked really well. We've been able to expand our reach without having to own the whole asset. I will say, I think it's complicated, the Piedmont story. I think one of the things investors have to work a little bit harder to peel back the onion to see what the valuation opportunity is at Piedmont. And when you do that, and you think about the look-through value through our interest in Quebec and Ghana, I think there's tremendous value in our stock. It takes a little more work. So that's one reason I'm happy to be back in Australia, putting us in front of people. I've got 39 meetings this week. Many are group sessions. So I'm in front of 60 or 70 different investors this week, and analysts and sales forces. And we're really interested to get the name out in the public here more and more.
Keith, I know I don't have a lot of time because you do have all those meetings coming up, but you just said something really interesting, which was it's not exactly simple. So you sometimes have to peel back the onion. So while I've got you on the call today, can you peel back the onion and help our investors understand where the value, and I guess the value add coming into 2023 is for Piedmont Lithium?
Yeah, so if you think about a business, so I spent 30 years as an investment banker, so I think a lot about valuation. So you think about our business, we've got a market cap in US dollars of around $1 billion, 1 or 2. We have 350 million or more of cash and securities. So if you take our market cap minus our cash and securities, we have an enterprise value of about $800 million. And for that enterprise value, we own 25% of North American Lithium plus this offtake agreement we have, which is quite potentially very lucrative. We're going to own 50% of the Ghana project, 100% of Tennessee, 100% of Carolina. And when you look at the value of Sayona in the market and Atlantic Lithium in the market, and we think they're both properly valued. We think, frankly, it's Piedmont that's the one that's undervalued. We own a lot of economic value in those, and I think you can make an argument when you take our enterprise value and you subtract out the economic interest in Quebec, that you're almost getting the rest of our business for free. And that's but I think it takes a little bit of work to understand that math. There are some others in the industry, friends of ours who we respect, who are also near-term spodumene producers, who have simpler stories. There's one asset, they're developing it, good for them, that's great. But I think when the cash flow starts being generated out of Quebec and people see that we're going to be buying half or more of the material through our offtake agreement at an attractive price, reselling it to customers, there'll be a lot of cash flow, and that should begin pretty soon. We think first production will be March or April. We think first shipment will probably be June, July, August. It could be very substantial cash flow this year and next. And all that cash flow can fund all the other development where people are worried about dilution. There may not be any dilution, and there may be, but never say never. But we don't think we're going to need to raise money so long as Quebec turns on as scheduled. So we're very excited to become a producer, become a revenue generating company, and for analysts to be able to look not just at net asset value and discounted cash flows, but actually apply earnings multiples. And when you do that to the outlook for 23 and 4, it's we're trading at a really low multiple.
Do you think there's going to be a bit more M&A in this space? Because every time I look, Keith, it's like every company goes, oh, we've got a lithium project. Well, we've got a lithium project. Are you, Keith, at Piedmont Lithium, looking at other projects to give that added value for shareholders? Because you're coming into production fairly, soon, in the next couple of months. That's going to give some revenue. Are you looking, how do you expand? How do you continue the value add?
Yeah, we're always looking. So we made the investments in Sayona and Atlantic Lithium in 2021. They were done at the trough. We were very fortunate. So we've done well with those investments. Because we made those investments, most every other spodumene developer has reached out to us. We looked at 37 different opportunities last year in spodumene, in brine, DLE, all over North America, all over Australia. We didn't see anything that really worked for us in terms of where the value was relative to the opportunity, but we'll continue to look. Our real priority is execution. If we execute, our share price should grow considerably. We'll be in a better position to be a consolidator. To answer your first question, I do expect consolidation to become a bigger theme. There really have not been many consolidators in this industry. You've had the Chinese, you've had Rio Tinto enter with one investment. Rumor is they're looking at other things. Pilbara bought Altura, but there hasn't been much. Allchem, Galaxy, or Cobra emerged. I think you're going to see a lot with companies that are operating, generating dramatic cash flows, very substantial amount of cash flows. I think you'll see them look to deploy that cash, and it's going to be really exciting. As you say, we need a lot more lithium projects. So there are a lot of people looking for lithium these days. Discoveries are being made, some very exciting ones. Those will take years to come into production, probably, but it just creates more opportunity for consolidation, and it'll be interesting to watch.
Where are you going to get the feed for the Tennessee mining operations? That's a lithium hydroxide plant. Explain the value within that.
Yeah, the real value there is, so number one, we'll get the spodumene feed from the assets we own, from Ghana principally, but also Quebec. And so we own that spodumene. So there's a lot of margin in the mineral operation. We own that, so that's important. The real value in Tennessee is the U.S. is going to need 40 times more lithium hydroxide per year than we currently produce. Wow. 40 times. That's based on announced projects from the big car companies, the big battery companies. Over 725,000 tons a year hydroxide. We currently produce 15. So there's massive growth. There won't probably ever be enough American supply, but anyone who could provide material in that market is going to be a favored supplier for sure. We know all the car companies, all the battery companies, they're cheering for us. They may or may not, we'll see, put some capital to work to help us and others develop the projects because they really need the supply. And if they have to, they can get the material from China. China will be there if needed. There's a strong desire to get material locally. And I believe in time, there'll be regional pricing evolve, which we've never seen in lithium before. But I firmly believe that anybody who can produce lithium hydroxide in North Carolina or Tennessee will get a better price, from a customer than if that customer has to buy from China with shipping and VAT and political issues and everything else. So, we're excited. A Tennessee plant will be the biggest lithium hydroxide plant ever built in North America. It won't be quite as big as the big plants being built in WA by by people like Wesfarmers and Albemarle and Tianqi, but at 30,000 tons, it'll be double the size of the biggest plant in North America now. So it's exciting for us. It's exciting for the industry, and we look forward to bringing it forward.
Where's it at now, right now, as I talk to you?
Right now, we're completing front-end engineering design, FEED. That should be complete in April, May, and we're completing permitting, which we think will be completed in May or June. So it should be ready to build in July. We then know we need to go raise the money. So we're in conversations with the DOE with respect to the loan program. We're in conversations with car companies and battery companies with regard to offtake and prepayments. And we're sort of waiting on Quebec cash flow. So we'll put the shovel in the ground as soon as we can, economically arrange the financing, sometime between the middle of this year and the first half of next year. And we're excited about that. We like the idea of doing that project on a non-dilutive basis. So the cash flow from Quebec can be really important to that.
Yeah, I think so too. Conscious of time, Keith, just wrap it up, if you like, in a nice Tiffany bow, and tell us 3 reasons why you think our beautiful audience out there should be really sitting up, because it's a noisy space, if you like. And so why is Piedmont Lithium such a good opportunity right now?
I think fundamentally we are, we're American. Being an American company, we benefit from some U.S. programs in a way that others might not. So we're an American company. It's a rarity. There are only 3 American lithium companies. 2 are big producers, Albemarle and Livent. So we're unique from that perspective. We're listed in Australia and committed to the Australian market. And we were widely held here a few years ago before COVID. We haven't been back. So I think there's an opportunity to rebuild that. We've been out of sight, out of mind, which I think is something we're trying to correct. And the fact that we're going to have near-term production and near-term cash flow to fund a diverse, integrated business is unique and exciting. And when you add it all up and you look at the valuation, I think there's a really compelling opportunity relative to many of the Australian players, again, who we respect. We don't think they're overvalued. We just think we're massively undervalued, and that's the opportunity for investors to look at.
And that's why he decided he needed to come on and talk to all you beautiful small caps subscribers out there. It is a really interesting story. They're just getting started. But as Keith said at the start as well, he comes from an investment banking background. So he understands shareholder value. He knows how this all comes together. And they've done some very smart deals going forward. So do your own research, as always. But Keith Phillips, CEO of Piedmont Lithium, thanks so much for joining me on Small Caps today during a very busy time for you.
Carrie, really appreciate it. Thanks very much.